The US stock market has triggered circuit breakers for 4 times in 2 weeks. What does this mean and how does it affect you? Alright, so the S&P 500, or the index that tracks the top 500 stocks in the US, plummeted by more than 7% on 18 March 2020, triggering the circuit breaker. And it has been triggered for 4 times in just 2 weeks. Now, a circuit breaker is put in place by regulators to allow investors some time to cool down, to gather information before they can make a more informed decision whether to buy, sell or hold their stock investment. Now, the circuit breaker can be triggered in these 3 situations. If the S&P 500 drops 7%, trading will pause for 15 minutes. If the S&P 500 drops 13% on or before 3:25 Eastern Time, then trading will pause for 15 minutes again. If the drop occurs after 3:25 PM, then there is no halt. Okay, if the S&P 500 falls 20%, then trading will be suspended for the rest of the day. So why did the circuit breaker got triggered so many times in a few weeks? To give you a reference, the last time it was triggered was in 1997. The reason is because many investors fear that the COVID situation might impact the overall economy and their stock investment. That is why they chose to sell their investment at either a profit or a loss. They want to hold some cash back so that they don't lose any further. And this led to a sell-off in stocks, which led to triggering the circuit breaker. Now, if you are an aspiring or existing investor, we have to recognize that recessions and downturns are bound to happen from time to time. It is part of a healthy market cycle. So if you're investing for the long term and you have a longer time horizon, there's plenty of time for the market to bounce back up. Now, if you want to be the first to get my latest insights on the investment market, I share them in my Investing Circle, which is a Telegram group where I share personal finance tips and investing tips. So you can click the link below to join. I'll see you guys soon and goodbye.